Good morning, good afternoon, good evening. So it is 9/11. I wanted to take a moment before we jump into the weekly watch list to just say anyone impacted by this day, thank you for your service. Thank you for your sacrifice. Today is a day that is not overlooked by me, by a lot of people, given the fact it was a day that unified America through a tragedy of what happened. So I wanted to just take a moment to just recognize 9/11, what today stands for, before we absolutely jump into the week ahead. So anyone impacted by 9/11, any family member that was impacted, any friend, anything like that, thank you. With that being said, let's go ahead and jump into the weekly watch list and let's figure out where we're going to go for the market week ahead. So first and foremost, last week we were looking for a bounce from here to the 407.11 target. We hit that, and the high of the week was 407.51. Okay, so what a beautiful, beautiful week, beautiful bounce, beautiful rally, as expected last week. Now here's where we're at for SPY as a whole. We are still in a major downtrending channel, but we have found some support, and we potentially could be getting those higher lows and lower highs, which means consolidation before a major move over the next few months. But let's touch on what are we going to potentially do for this week. So first and foremost, we hit my target of 407.11. And end of day, I was watching one key thing, and that is this trend line right here. Okay? This trend line right here. As you can see, it lines up with that 407.11. It lines up with the prior highs. And on the shorter time frame, it was putting in a rising wedge. Okay? A nice rising wedge. Historically, these are bearish. They often do this, which is exactly what played out given the market after hours on Friday. Okay? So with that being said, where are we at, where are we going, and what could happen for this week? Well, before we jump into the chart or anything like that, I want to touch on what do we have scheduled for this week in terms of economics, all right? Because this is going to impact where the market goes. So there's two big events this week. First, we have CPI on Tuesday, all right? So anyone who's been tracking inflation, assets and where we're at with inflation numbers, that will be updated and given to us on Tuesday. If we run higher than expected, you can expect the market to pull back significantly. If we have peaked and we're starting to pull back, we might see a continued move up. So we'll keep an eye on CPI. That is Tuesday. This will impact the market going forward. Now, Tuesday is not the only day that we have economic news and economic data that will impact the market. On Wednesday, we have PPI, okay? So CPI tells us inflation, PPI tells us more manufacturing, how much it's costing for these things to be produced, all right? So CPI, inflationary numbers, PPI, also an impact of inflation. So we'll keep a close eye on those two things, Tuesday and Wednesday. Those are the big things to watch for the week. Thursday, we do have retail sales if you do focus on retail names, but that's really where we're at for the macroeconomics. So with that being said, the market at the current moment is reacting to this downtrend line. So if we are unable to gap above or get above the prior high, which would put us around that 407.50 level, okay? If we're unable to get above 407.60, we'll put it that way, then we can expect some type of reaction off of this trend line. You can see it's happened many times. So we had a pullback that resulted in a 1% pullback from this trend line. We had a pullback that resulted in a 3% pullback from this trend line. This was Jackson Hole data. And we're right back here again. So unless we're able to reclaim it, my thought is we get a pullback on the markets, and as long as we can hold a higher low, I think there's potential for us to move back to this area up here around the 411 to 415 range. That's where I'm expecting the market to continue to rally to. If we are unable to get above 407.56, well then obviously we're going to keep a close eye on this support as we've held since June, and we'll see as long as we can hold that, there's still potential for bullish continuation. But just as a reminder, the more you touch a support, the weaker it gets. The more you touch a resistance, the weaker it gets. So this is the third touch of this resistance. So it is possible that we could get through this given the fact that it's getting weaker and weaker every time. With that, you can see that we have a gap to fill to the downside, which is about that 401 level. And if we go any lower than that, then we do have some more demand around 398. Okay, so the first thing I'll be watching is this trend line here, given the fact that this is the prior high. And we'll see what happens off of that zone. So I do think that we will push down to potentially fill this gap unless we can reclaim 407.56. If we can reclaim that, then we have potential, obviously, to break, come back, retest, and then continue higher from there. So at the current moment, I did get short on the market on Friday at close at 407.09. All right, I got short given the fact that we had that rising wedge. I got in somewhere here, somewhere off of here, and then you can see it drifted and broke down as I anticipated. So we'll see what plays out this week. Keep a close eye on that 407.56, and if we do pull back, keep a close eye on that 401.28 level, as that has been the prior highs. Going into the Qs, very similar situation, okay? Once again, the Qs don't have as strong of a trend as SPY. So for example, if we go to the 1 hour, you'll see that if we take the prior high to now, the Qs have already started to break. All right, so the Qs are not holding as much respect for this line as SPY. So you can see it has broken it at this point. But once again, just because it's broken it after hours does not mean it's going to hold. So we'll keep an eye on that. But I'm not keeping an eye on this trend line for the Qs, given the fact that it's broken it. So we're going to go ahead and remove this. Now, if SPY pulls back, I expect the Qs to pull back. But large cap tech actually looks decent for some setups. So we're going to touch on that. There's a few of them that I like going into this week. So once again, if we do see a continued move up on the market, I will be looking for a key rejection off of this level here, anywhere between 312 and 317. You can see this also lines up with this downtrending channel we have here, and that is pretty much the top of the trend. So I would expect something to likes of that, followed by a pullback from there. All right, so I'm going to keep a close eye on that. Once again, we very well could see something very similar to SPY where we get a pullback and then into that and then pull back from there. But this will be something I am watching. The Qs do look better than SPY at the current moment. And we'll touch on a few charts that look good to potentially play further upside within the Qs if we see it. So we'll keep a close eye on this. Once again, this target, it might happen this week. It might happen next week. It might happen never. It all is going to depend on CPI, PPI, but this is my main target that I'm watching for to see a major reaction off of the market for the Qs to potentially lead us to our next leg down. All right. So I do think there's a little bit more upside in the Qs. I just don't know if it leads to one more slight pullback and then continuation, or we just get right there. With SPY looking how it is, I think there is a little bit of a pullback, but we'll see going over the next few days. So let's go ahead and jump into the weekly watch list. IWM, very similar situation as the rest of the market. It did gap up. You can see it has not broken its 1 hour trend here. It is not even gotten to that trend yet. So maybe we see a little bit more continuation on IWM before a slide. But once again, this gap right here and where SPY is at is a little concerning for me. That tells me, hey, we potentially get a pullback and then something to the likes of that. Okay, so that's what my main projection is for the market right now. So Tuesday, Wednesday, I'll be honest, tomorrow and Tuesday we'll probably chop around a little bit in anticipation of CPI numbers. And then CPI is obviously going to be our big determination of where we go from there. But let's go ahead, jump into stocks that I'm looking at for the week. The first one is Apple. All right, the first one is Apple. So on stream, I actually talked about this stock and how I liked it as long as it could get over that prior high of 517 or 157.17. And it did clear that. It did clear that at this point. So I'm keeping a close eye on Apple. It did break its falling wedge. You can see the 921 EMAs are crossing to the upside on the 2 hour here. So if we can get continuation, there is potential we rally back to the 162 level, which would put us at this trend line that we have going on, and it would line up with a supply zone out of the market right there. So I'll be keeping a close eye on that 161, 162 level for Apple if we can continue higher. Now, once again, if we do get that slight pullback, what I'm going to be watching for is I'm going to be watching for the 3 hour, okay, the 3 hour on Apple to finally get that bullish crossover. As you can see, it tried here and rejected. As you can see, this whole move up, it held the crossover to the upside, except for right here. Okay, so if we get this 921 EMA crossover on the 3 hour, this looks good for further continuation. If we do pull back and we're unable to get that crossover, once again, here we go. Potential for the same situation, potential for a move down, but at the current moment, given the fact that it did have a falling wedge that's breaking out, this looks good. All right, so I'm going to keep a close eye on Apple going into this week. We'll see what happens. If the market can be strong, I expect Apple to be strong to potentially go that 162, 163 level for that gap fill. The next stock I want to touch on is Google, all right, or Alphabet. So obviously Alphabet is in a massive bear flag right now, all right, but it is holding its support exactly where it needs to hold. So with that being said, I am looking to see, can we break the prior highs? All right, can we break this zone here? And at the current moment, we have failed to do so. Okay, so a clean break over 111.11. Clean break over 111.11 can send this thing much higher. Okay, because we don't have much supply or anything else until about 112, 114 area from there. And if we can get through that, obviously we have a gap to fill up, 115, 116 area. So this will be one that I will be keeping my eye on going into this week. If we can get over that 111.11 range, I think this has potential for a bigger move up to the next major zones around 113 up to that 116 level, as I touched on, given that gap fill. The next stock is probably a stock you have never heard of, okay? But it looks really good. It is DBI, Designer Brands Incorporated, all right? This is a longer term setup, all right? It's a longer term setup. But as you can see, on the weekly at the current moment, we had a nice consolidation. We broke out, we came back, held our 9 EMA beautifully, and then put in a bullish engulfing, which tells us that we're holding this nice bullish uptrend very, very well. So DBI is actually one that I really like. Obviously, it's a very cheap stock. It's only $17.38 at the current moment. And I think this has potential to get back to 20 over the next few weeks. You can see it is very, very strong right now. It did put in the same type of falling wedge as a lot of other things, and you can see it has broken. So with falling wedges, I look for middle of the trend, price target, my first one, which would be about that 1774 level. I look for higher range, that 1945 level, and then from there we're looking at prior highs if we continue to rally through, which would put us at 2055. We get through that, we have a gap to fill to the upside. Okay, so this looks really good from a weekly time frame, a further continuation of what could play out over the next few weeks. Now this could be an end of October type of play, but it is very bullish. It is very strong right now. We're holding our 9 EMA beautifully, and as long as we can continue to hold that 9 EMA, I think there's definite potential that this thing sees $20 plus over the next few weeks, as long as the market can hold itself together. The next stock I want to touch on is probably another stock you've never heard of. It's called OHI, Omega Healthcare. It's another cheaper name, but as you can see, this has put in a beautiful weekly rounded bottom. It's starting to work on another, you can call this a little cup and handle if you want. Just the cup starts here, which is fine. So it's trying to work on its handle now. You can see that we are holding that 50 RSI. You can see that it is flagging here as well. Okay, so a break of about $33 I think has potential to send this much higher. Then you're looking at 34, you're looking at 35.27, and then from there you're looking at 37.35 for the gap fill. So once again, this isn't going to be a super fast moving name, just given the fact it's a healthcare name and most of them don't move very quickly. But this is in a very strong uptrend and looks very, very good for continuation if you want to try and take a swing on this position. Rounded bottom, held its beautiful 31.83 and is trying to continue higher. So stop loss, you're looking about the 31.50 level. I like to put it a little bit lower than the trend in case it does push down the trend and then wick back through. And then once again, price target, first price target's 34, second price target 34.80, 35, and then 37.35. I'm going to touch on two other names. The next one is going to be Meta. All right, Meta is working on a descending wedge. Okay, traditionally these are bearish. Okay, traditionally these do this, but it is starting to run right back into that resistance point. So we'll keep an eye on that resistance point. If the market does reject, I think this is a very, very high quality setup for a downside move. So I'll be keeping a close eye on this one. If we can break, I do think there is potential for us to move back to the 190s area, 195 area. If we do reject, once again, if we break that 150, we're going probably directly to 137 with not much in our way. So keep a close eye on Meta. It is a little bit more of a swing as well, but it is starting to put in that descending wedge, which is traditionally bearish. But if it does break 190, 195 to the upside, if it does break down, you're looking for a gap fill 162, and then once again that breakdown under 154 would send us probably to 137. So this is a swing play, one to keep on watch. It is getting very, very tight here, so I do expect some big moves over the next few weeks on Meta. The last one I want to touch on is PayPal. All right, is PayPal. PayPal sitting in a nice pattern at the current moment. It is trying to break its prior high. Okay, it has not broken its prior high. The falling wedge is intact. It has continued to hold its 921 EMA to the upside, which can give further strength, but it has not been able to break its prior high level for the market, or for its resistance. So until it does that, be careful on this name. But if it can start to break that 97.50 level, I think this has potential for a move back up to 100. And then, if we really can get going, we have potential for a gap fill back at 107. So that's going to be your weekly watch list. There are a few upside plays, there's a few downside plays. Once again, I do still think we get a short-term dip and then continuation on the market to that 410, 415 level. So I'll be looking to play that. Once again, the way I play bounces is through selling cash secured puts at the current moment, given the fact that I don't want to fight the trend of the market to the downside. So that's how I'll be looking to play things. Once again, here's a few stocks to keep your eye on. If you want me to review any stocks that you have, feel free to follow me on Twitter, send me a message on Discord, and I'll be happy to look at those and give you some feedback on your charts so you can make some improvements as well. So that's going to be your weekly watch list. I appreciate you hanging out, spending time watching the video. Please be sure you like, comment, and subscribe to the channel, and I will catch you on the next one.